Welcome back everyone to Trader UK. Adam here. Today I'm going to run you through the top 10 largest positions that I hold within the portfolio. I'm going to do that by showing you the weighting percentage wise within the portfolio and then also the pound sterling value. I would say at the moment it's a mix between recovery and technology, but the portfolio is also a mix between companies that I have full conviction on and some that I don't, some that I'm winding down over time. So I'm going to let you know which is which as we run through. Before we do get into it, if I can ask you, smash the like button for me. It really helps out with the channel, and if you want to subscribe as well for more investing, tax and general money content. Before I do reveal the number 10 spot, I will just give a quick mention to number 11, Walt Disney. Walt Disney is a company that I'm building a position in at the moment. Great company, love everything they do. If I redo one of these videos in a few weeks' time, you'll definitely see Walt Disney making its way into the top 10 there. But beating it into the number 10 spot here, we have Ilika. Ilika make up 2.3% of the portfolio, about £1,400 or just over. These guys are a solid state battery technology company. They have two product lines, Steriax line, which are their little micro batteries. They go really well in medical devices and IoT devices. And then they have Goliath, which is their large form battery suitable for EVs. I would usually class Ilika as a high-risk investment. It's a small cap company, and I would normally have 10 or so of these high-risk plays open at one time, but they would always be at the other end of the portfolio. The reason that Ilika makes it into the top 10 is because their Steriax line is proven. They sell it already, it's revenue generating, so I feel like that takes a lot of the risk away from the more risky project, which are their EV batteries, the Goliath project. So I'm full conviction on Ilika, and I'll happily add more as we progress. The number 9 position is held by JD Weatherspoons. Over £2,000 in this stock at the moment, 3.3% weighting in the portfolio. This is a pub chain, if you don't know, out of the UK, a very successful pub chain. It is a recovery play, but it's also disruptive enough that I will hold it into the long term. Little things with this one, like their app, when you go to their pubs, their restaurants, you don't need to go to the bar to order, you don't need a waiter to come to you. Log into the app, table number, pop your order in there, and everything will arrive at your table. Via the app as well, it's very clever. If a group of your friends go to the pub and you can't make it, maybe it's a birthday or something, you can send drinks to their table, a round of shots or something for them without being at the pub. So I like this one. They found a way to take money out of people's pockets who aren't even at their bar, and that's a really popular feature as well. So full conviction on Weatherspoons, happy to add more as the economy reopens. In the number 8 spot here, we have Whitebread. Whitebread, 3.5% weighting, £2,150 in this stock. Whitebread are in the same industry as Weatherspoons that we mentioned before. They own pub chains, restaurant chains, and a hotel chain called Premier Inn. This is actually one of 2 companies that I don't have full conviction over. In fact, I have been reducing my position down in this company. I took part in the rights issue at the start of the pandemic, and at that point, they said the money was going to be used to expand their hotel network across Europe. Their Premier Inn brand, I think it was, in primarily Germany. Because we've seen the full impact of the pandemic now with the changes to business travel, the changes to working from home, I don't see that as a great model anymore. So I'm going to reduce this one down probably altogether, and we'll shift that money into more of an Airbnb type model. So I don't have full conviction on this one. By the time I do an update of this video, you'll actually see this drop out of the top 10. In the number 7 position, we have Tattooed Chef here, 4.2% weight, just over £2,500. They do plant-based foods, if you haven't seen them already, primarily frozen foods across the US. They're in stores like Sam's Club, Costco. They're now into Walmart and Target more recently. They released an earnings report recently that wasn't received too well. They beat slightly on the revenue figure, but then they had a big one-off expense in there, which I believe related to the SPAC merger, which didn't go down too well. But I'm high conviction on this stock. I really like it and happy to add more at the right price. I think there was some good data to come out of that earnings call if you go and have a listen to it. Q1 is always going to be a good quarter. So I think we're going to see, in fact, I think we'll see 2 good quarters coming up now. Q1 will be good for this type of product because of what it is. Coming off of Christmas, coming off of New Year, new me, New Year's resolutions, healthy eating, new vegans, new vegetarians, and people that just want to cut down on their meat content. So just because of what the product is, we'll see a good Q1. Q2 will do well because Sam Galetti mentioned in that earnings call, by the end of Q1, they're going to be in 40% more retail outlets. 40. That is a lot. So obviously we're going to see the full impact of that in Q2. So if you're holding Tattooed Chef, hold at least for the next 2 quarters. I'm in this one for the long haul. I think it's got a lot of growth ahead of it. But certainly the next 2 quarters, I think will do very well. Number 6, we have a fan favourite here. It's Apple, £3,000 or just over in this one. 4.9% weight in the portfolio. We all know what Apple does. I wasn't actually heavily invested in Apple until more recently, but the recent pullback gave me a much better entry point. I think if you can get Apple under $120, that's a great price, and I'm happy to add more at that. Their last earnings were so good, really impressive, but the share price pulled back after that, so probably a good sign that the market was a little bit overheated. But when your earnings are that good, and they were announcing massive growth in China as well, then it's not going to be long before they're hitting new highs again. I mean, it depends on how the chip shortage affects them as well, so we'll see how that plays out, but it's Apple, so I'm definitely high conviction on this one. The number 5 position we have here is Tesla. 5.2% weighting in the portfolio, over £3,100 in this one. Tesla, this is a company that I've been in and out of before, and I learnt my lesson because I made a little bit of money, but I could have made a lot of money. My approach with Tesla now, buy, hold, if it pulls back, buy some more, but don't bet against Tesla. A lot of legacy automakers kind of upping their commitments at the moment to EVs, but I don't think that means that they'll get anywhere near Tesla, and I don't think they will anytime soon, so I'm full conviction on this one. The number 4 position in the portfolio is Amazon. I have just over £4,000 in this one. That's a 6.6% weighting. I actually started loading up on this company in October, November time on the basis that I thought they would have a good Christmas period, and they did, particularly on the retail side. Obviously, what I didn't see coming was that at the same time as announcing those results, Jeff Bezos would announce that he's going to step down or step aside, whatever it is that he's doing. And obviously the market didn't like that. It pulled back a bit, and it's been flat since. In fact, if you go and have a look, Amazon's been flat for a long time, about 6 months or so now. So I do think that it's due a bit of a breakout, this one, but it needs to pick up a little bit of momentum. I would say under 3,000 is a good price for Amazon, and I do add to it, I nibble on it under 3,000, but they do need to deliver some good results, some more good results, just to prove that life will go on without Bezos at the helm. The number 3 position in the portfolio is TUI. This used to be the number 1 position, actually. We have £4,600 in this company at the moment. It's a 7.5% weighting, so we're getting to the bigger weightings here. TUI, the German travel giant, I like this company, but the dynamics have changed a little bit. It's a recovery play. I will continue to hold it until at least international travel is fully reopened. They still have a lot of potential ahead of them because of the market conditions right now, but the dynamics have changed a little bit. This company took on a lot of debt during the pandemic, and I think that will impact their ability to make a profit or be profitable for some time. So yes, top 3 for the moment, but it will slide down the rankings as we progress through the year. The number 2 position is held by Ocado. Similar weightings to TUI on this one. Ocado is an online grocery retailer out of the UK, but what a lot of people don't see with this one, this is a technology company at heart, and that's where their potential lies. I'm going to do a full video on this one because they just released earnings for 2020, and there's a lot of good information in there, so I'll do a deep dive on that. But the share price slid about 5% after the earnings, and I actually ended up buying more, so I'm definitely full conviction on this one. The thing with Ocado is whenever they deliver results, they'll talk about amazing revenue growth, they'll talk about increased capital expenditure, and then they'll announce their loss for the quarter or for the year. And then they'll forecast for next quarter or next year, and they'll talk about amazing revenue growth and increased capital expenditure and another loss for the quarter or the year. So Investors get a little bit tired of that in the end. They get a little bit impatient, but you shouldn't. We know it's a growth company. We know they're going to spend a ton of money on CapEx. So you have to kind of expect that. To me, though, if you see this under £20 a share, that is a signal to buy, and I will add more under £20 or around that £20 mark. You have to remember with Ocado that their model isn't just targeting the UK online grocery retail sector, even though that's a big sector and they have a lot more potential there. Their model targets the global online grocery retail sector, and their model is very successful as that, whereas a lot of other traditional supermarkets fail to cross borders. Ocado does that very successfully with their model. So we'll look at that when I do the deep dive video on this one. In the number one position here, we have a company that I have £8,700 in. It's a 14.3% weighting in the portfolio. And that's not because I've been adding to it recently. It's more because it's performed very, very well. Jet2, these are the number 2 company in the UK package holiday market. And they have some way to go to catch 2EAG, who are the number 1, who I mentioned already. But I believe long term they will catch them. They'll catch them and they'll surpass them because they're very good at what they do. Now, usually I'm looking for companies that are very disruptive, companies that can capitalize on societal trends, societal changes. And you might think that Jet2 doesn't really do that. There were 2 things that got me investing in Jet2, and I'm really glad that I did. One big catalyst and one tiny detail. The big catalyst was Thomas Cook. When that company went under, that left a big hole in the market. If Jet2 swallow up half of those customers, it will double or triple the size of Jet2 overnight. The little detail that I saw was when, a trivial little thing, when Jet2 started offering Nando's on some of their flights, which sounds silly. If you don't know Nando's, it's a chicken restaurant in the UK, but very popular with 20s and 30-somethings. That showed me the target market. It showed me that they're looking at the future. They're not going for your typical 50 to 60-year-old, and they're doing very well at what they're doing. They're expanding and expanding. So this is full conviction for me. Buy and hold and watch them print money. There you have it then, my top 10 holdings, the 10 positions that influence the direction of my portfolio the most. I would be very interested to know, what is your top holding? What company do you have full conviction over? If you did make it this far, don't forget, smash the like button for me and subscribe for more similar content. Thank you all very much for watching. I'll see you next time.